What's happening? It is Wednesday, October 18th. Typically get this on a Tuesday, but Tuesday I was in the air. So I had to leave my place at a quarter to 4 a.m. to try and get things done, get where I need to get. I'm out in the Maryland area. Got some speaking to do today. And then, of course, you guys know the Memphis event's coming up. We've been talking about it. If you're not there, you're not there, but wish you were there because we're going to be bringing a lot of interesting data to you. And of course, just helping you understand and get deeper into how to be successful in the current investing climate. It's not an easy thing. I've got two I'm closing on right now, but it's not something we're slowing down. We're continuing to keep digging in because the way things are looking, if we're not getting it now, I don't know if it's going to. Well, I mean, we're still going to be able to, but it's going to get harder. The one thing that people keep talking about, it's like, well, these rates going where they are, and then of course the cost of housing keeps going up. Houses have got to be able to drop sometime. I don't know if that's going to be the case, but if let's just say what happens is the one thing that I don't think will happen, which is interest rates going down. Let's see if it does happen. What's going to happen with those house prices? They're going to compound even faster. They're already going up approximately almost 9% this year. What are they going to do if rates get better? So think about that if you're in a pause mode. I am not convinced that we should slow down on acquiring housing. Now, you don't mean just buy a house to buy a house. You don't just buy anything, right? It's got to be a market. You can keep it reasonably rented. For the entire time you own it, you can raise rents on it, and you're going to get at least a 2.5% appreciation. If you can accomplish those, you should really look really hard at that. If you don't understand why, call me. Set up a time. Reach out to Bree. Or just text me, 602-291-3357. Aaron, we need to talk. We need to talk about the numbers and understand what I should be purchasing and what I shouldn't. I'll connect you, have Bree sync up our calendars and move from there. So let's talk about what's gone on this last week. So you've got, a few things. A lot of the Fed presidents and the people who are governors across the Fed, they're meeting and they're talking about whether or not they should be raising or lowering rates. There's a lot saying it should keep it right where it is. Now, remember, the Fed rate somewhat distantly influences the interest rates that we have. The Federal Reserve is the bank of banks. So they're the ones that issue rates to the other banks. Now, as they're increasing those interest rates, it's pushing their costs up, slowing down their capability to grow. And then, of course, you have continued inflation in other ways. They're trying to push and or inflate costs so high that people stop buying, and then there's not this big run for things, then bringing those costs down is that whole supply and demand thing. So they're trying to quell the demand with this. What's interesting is you got the San Francisco Fed president and Fed Governor Michelle Bowman also saying that, the bond's been doing a little bit tight and should be helping, and they may not be in a need to hike again. But, then you've got Bowman, on the other hand, is claiming that we should have more hikes. They're claiming that the jobs are resilient, the economy is resilient, we're seeing job growth. We need to look deeper at those numbers. I mean, if they took and peeled back the numbers like we did the last couple of weeks, because we got that from various sources, that the jobs are not near as strong as they appear to be on when you just look at the surface. Start looking at people, carrying two jobs. They're counting that as two separate things. There's a lot of interesting data within the jobs report. So it seems like there's some disconnection with respect to what they're thinking is going on in the market. We're also seeing a lot of the other indexes pushing up, the consumer price index, all these other things getting hammered, retail sales. They're looking better, but the problem with retail sales we're dealing with right now is consumers spending more on necessities and less on discretionary items. So they're starting to get a little bit tighter too. So that's going to help inflation. Eventually, it's going to help inflation. I don't think we're there yet. Inflation is still a lot higher than they want to look at, and as longer, or at least they want to admit to. And as long as inflation is higher, we're going to see mortgage bonds go higher. Just the way things are going to go. So let's look at those mortgage bonds here, and we can see exactly where they're heading. I've got a little bit of an idea on where we're going. So you've got the channel that I have maintained and have showed you pretty consistently for some time. And that channel was up here, following the top of this downward, and this where it is right here, this upward part of the channel was following the downward, the bottom part of this channel. I think we're forming a new channel. I think we're forming a new one, and we're literally forcing ourselves continue down in a different lower channel, but still in the same trajectory. Right now, we've hit a support line here. So we're at the bottom of the new channel, and this support, and it could come back up. We're also in a very, very oversold position, which could come back up. So we'll see how this all plays out. I think that if we get into this oversold position, bounce back up, we might see a little bit of improvement coming up. It's hard to say. With all the data that's come out, it could be something that keeps pushing it to a more steeper decline, steeper decrease in interest rates. So just be on the watch for deals as they pop up, opportunities as they pop up. Jump on those opportunities. Don't sit. It's kind of like climbing Everest. You got to wait for that window to summit. And if a window opens, you miss it. You miss it. Nowadays, the windows are real small. So appreciate you guys. I'll get back to you on Friday. Thank you.